Rate hikes, trigger rates, inflation, and the Bank of Canada has overshadowed the changes taking place that are primed to change our housing market. Keep watching to see what's been neglected. The Greater Vancouver real estate market is being tampered with to combat the housing crisis, but most of it has gone unnoticed. For example, a reminder that subject-free offers now have a backdoor option out, with buyers wielding a right of rescission giving more power to purchasers to pick and choose devoid of pressure in timing and deadlines. Rental restrictions have been slashed across all strata properties. Incentives and forgivable loans are being granted to homeowners looking to renovate basements for rental stimulation. We've seen pre-sales allow you to put next to no cash down, allowing you to use collateral as an alternative to down payments. And finally, what is the biggest change becoming is the forthcoming regulations to allow up to 4 units to be built on lots currently only zoned for single family or duplex use. Larger lots being permitted up to 6 units. But did you catch that? Lots only zoned for one individual home would be permitted to build up to 6 units dependent on the size of the lot, all in the name of inventory. Expect then after the soap opera of inflation and interest rates to be standing before a market primed not only to continue in its usual price direction of up and right, but also change in its way of operation. So speaking of prices, what's going on in the market anyway? Well, sales continue to decrease. For example, in the past 60 days, using November as a comparison, there was around 1,700 homes sold, which is about half of the sales that we saw in 2022. Inventory continues to slowly increase for attached homes across the board. In Port Coquitlam, for example, compared to the beginning of the year, attached homes are up 25%. Despite this, however, sale prices are up. If you still have trust in the Bank of Canada, and let me remind you that they disclosed interest rates would remain low in 2022, then you can expect them to reach their inflation target of 3% and begin to cut rates in 2024. How inflation falls and where interest rates actually end up is anyone's guess for the next 12 months upcoming. What is certain, I would think, however, is in the near future, borrowing rates will be lower than they currently are, which I think merits exploring options such as 2 to 3 year fixed, or if you still have the stomach for it, variable. Putting this video all together, the real estate market is being primed to operate like it never has, and this is being overshadowed by the drama that is monetary policy. As for real estate itself, since peak of prices back in 2022, home prices have remained resilient. And the long duration of the market activity that's been curtailed by the Bank of Canada is, in my opinion, going to be fronted by a violent import of buyers when the dust settles, like in every past cycle. 2024 is ahead of us, so Happy New Year and see you on the next episode.